Welcome back everyone, Jake here. In this video, let's talk about one of the best companies and best performing stocks of all time, and that would be Adobe. Now personally, I've been using Adobe's products for almost 20 years. Fantastic product, fantastic service. And when you just zoom out and look at how their stock has performed since 1986, up 252,000%. I mean, Adobe has been a fantastic stock to own long term. However, if you bought Adobe about a month ago, you're pretty upset with yourself. This stock peaked intraday basically at $700 a share. And from its high, it's down 20%, 16 or 17% over the last month. So in this video, let's quick recap why Adobe's share price has dropped. We'll review the fundamentals, and then we'll look at the technicals and see how can we trade this to make money in the short term. Now, Adobe's share price has taken a hit this month primarily for two reasons. The first one is just a sector trend of these software companies with very high price to earnings ratios, high price to sales ratios. They've all been selling off in general. So Adobe has been swept up in people basically taking profits on companies that have run up huge. The second one is that Adobe did report earnings, and Adobe's stock price fell over 10% in one day, basically on earnings report. And it's kind of weird because when you look at their earnings per share, they were projecting 3.2 and it was reported 3.2. So they met their expectations on earnings. So why did Adobe's share price fall? And it's because they softened their expectations for next year. So Adobe expects to earn an adjusted 3.35 per share on sales of 4.23 billion. However, analysts were projecting 4.33. Additionally, for fiscal year 2022, once again, Adobe is lowering its expectations, its guidance for its profitability and sales next year. And you can't really blame Adobe for doing this. Like, you want to be conservative when projecting how much your company will grow, how profitable it will be, because if you beat expectations, then everyone's happy. You don't want to set too high of expectations and then you fail to meet them, because that basically panics investors. So the fact that, Wall Street and analysts were projecting what 2022 numbers should be for Adobe, and Adobe disagreed. They said, no, it's going to be lower. That's why in the short term that Adobe sold off, but this company still has rock solid fundamentals, rock solid growth. So let's go on macrotrends.net and just look at these fantastic numbers. If you guys are old enough to remember, Adobe used to sell their products like in stores. You'd buy the CD-ROMs and install it on your computers. And in, let's see here, 2013, 2014, the company took a short-term hit by transitioning to a subscription-based model. Now everybody is paying 40 or 50 bucks a month for Adobe Creative Suite, and it's basically been a nonstop climb in their revenue for the last 8 years. And when we look at the most recent couple quarters, it's a little wonky because of the pandemic. I think a lot of people, as they started working from home or freelancing, becoming their own independent creators like me, they're now signing up for and paying for Adobe Creative Suites. So the amount of people, their revenue jumped significantly in the first quarter of 2021, and their revenue for the most recent quarter was $3.9 billion. Still up 22% year over year. Previous quarter up 22%, the previous quarter up 26%. So this company is still growing like, well, not as much as maybe some of the other FAANG names like Google and Microsoft, but it's still growing. And when you look at their net income, obviously with net income, how you do depreciation and that kind of stuff, you can kind of fudge the numbers. But this company is massively profitable, bringing in a profit of $1.21 billion last quarter. If we just check out share outstanding, you guys know how much I hate share dilution. Adobe is not issuing new stock. They're doing stock buybacks, but a very small number. I mean, they only decreased their share count year over year by 0.82%, But once again, I'm happy that they're not diluting me by issuing new shares. So here is the catch with Adobe, why I don't own Adobe long term, why I'm not looking to take a long position right now. And the reason why is because this company is, according to its price to earnings, price to sales ratios, very, very rich. It's currently trading at a PE. This is after the 20% decline from its high. It's trading at a PE of 46 right now. But when you look at the historical valuation of Adobe, it's always been in the 40s and 50s. When it switched to the subscription model, it was over 100 basically. You got to go back to the early 2000s to get it below 20, but even if you go back to the mid 2000s, once again, it's in the 40s and 50s. So because this is such a premium brand with a fantastic product, a good customer relationship, user experience, people just pay more for Adobe than they're willing to pay for other companies. And I don't see this changing. I think investors are always going to pay a higher PE ratio in order to hold this company just because it is one of those elite brands on the New York Stock Exchange. When we go to price to sales, we look at this. It's pretty dang high, guys. Currently 17. Generally, I tell you guys anything over 10 and just look somewhere else for a better deal. But once again, with Adobe, 17 is why I'm not taking a long-term position. But in this video, we're going to try and short-term trade it. But when you look at this price to sales of 17, it is pulled back. It is pulled back from the 21 it was at as of last quarter. For fun, we can look at one more price ratio, and I like looking at price to free cash flow. Where is it currently? Where has it been valued in the past? And currently their price to free cash flow is at 40, once again pretty high, but as of last quarter it was at 48. So basically you're getting a 20% discount as Adobe's share price has recently pulled back. So when we go on the charts and we look at the moving averages, on the day that it sold off, this was Thursday, it dropped 10%. The 200-day moving average basically caught it, and it did hover there for the day. I was watching it to see if it would break through it. Would it fall through its 200-day moving average? And sure enough, on Friday it did, and it dropped below the 200-day, so it's now at 556. So if you were looking to take a long-term position in Adobe, I highly recommend you reference the technical indicator, the Stochastics, and you see when is it going to stop falling, basically. If you guys haven't seen my video on Stochastics, go check it out. But as long as it's in this oversold range, it still has the potential to keep falling. So I'm not looking to take a long-term position or a short-term position until the stochastic indicator basically gets back above 35. 35 is where I say, okay, it's oversold, it's going to start uptrending again. Once it gets above this 35 line, that's when I'm looking to open a debit spread on Adobe. But before we do that, I think it would be beneficial to do some charting and look a little bit deeper at Adobe's technicals. And let's actually go back in time to the pandemic crash in March of 2020. Adobe, just prior, was trading at $380, and it looks like it got as low as about $300. And then the Fed started pumping money into the economy, Adobe's share price took off, and it entered this range where it started channeling for quite a while. I remember earlier this year I was watching it. So in August of 2020, it hit its line of resistance here, a nice round number basically, of about $540. And at this point, investors kind of realized it was just going to stay within this range probably for a while. So there's a line of support here at 460. It did get below it 2 times, but basically 460 was the bottom range of this channel. And it stayed there until June of this year. So from August of last year to June of this year, 10 months, it stayed between this range of 460 and 540. If you guys were following my channel earlier this year, this is a stock that I made a lot of money on by buying call contracts. Once that I saw the 200-day moving average had caught up to this line. Actually, let's just go ahead and add that now because I think this is beneficial for you guys to see. So the 200-day moving average is this orange line. As soon as it caught up to the share price, Adobe was due for a breakout. It was just on technicals alone going to start uptrending again. So back in June, I owned several call contracts at the time, and I basically wrote it up to 600 and then sold my call contracts. So with Adobe, these large cap stocks, they just hit nice round numbers looking for lines of support, lines of resistance. So I would argue there's definitely one here at 600, and there's another one here at 500, 550 basically. So as soon as it got above 550, it was in a breakout until it got basically the upper range here is 700, but it looks like there's another psychological barrier here at 650. What I'm looking at though is that on Monday, when the stock market opens, Adobe's probably going to fall again. I think it will keep going down. And where is it going to go down to potentially on Monday? I think this 540 line is going to carry over. And if Adobe breaks through that, I mean, all bets are off. It's probably going down to 500. So what I want to do is I want to keep watching this day to day until it's done falling. Basically, the shorts at that point are going to have to cover their sales and buy the stock back in. So I'm watching this technical indicator to see it get back above 35 outside of the oversold range. And then we're going to trade a debit spread on it. If I've already lost you guys by saying debit spread, I highly recommend you check out my playlist on trading options. If you're already familiar with buying calls and selling calls, we're doing a call debit spread in this video in a second. You might want to check out this video, Debit Spreads Explained. So let's actually go in my Robinhood account and set this up. Unfortunately, it's the weekend right now, so I can't actually execute it. Additionally, once again, I'm going to wait probably 2 more days before entering this position, just so that the selling stops in Adobe. So let's go to the right side and click Trade Adobe Options. Make sure that you're approved with your broker. And for an expiration date, I always like going a month into the future. Obviously, you can get more dramatic returns if you do weeklies, but that's just not how I trade, guys. Additionally, if you want to buy out of the money call contracts, you can get more dramatic returns, but I always like going just at the money. So what the heck is a debit spread and how do I make money on it? If we go back to Adobe's charts, we're basically going to buy a call contract and then sell a call contract against it to create this range. And if the share price of the company can just zip through that range, you can make pretty dramatic returns on debit spreads. So to set this up, let's look at this strike right here of 560. This is the call that we're going to be buying. I'm buying a call at the money, once again, to hopefully that these contracts basically, if they're out of the money, only have extrinsic value. As soon as the share price moves above 560, these contracts now have intrinsic value. That's what I'm trying to accumulate faster by buying debit spreads that are at the money. So for the call that we're buying, 560, and if you want to just buy a call and do that, you can. But look how much this call costs, $2,183. That's an expensive contract. When you just buy calls, you're paying for unlimited upside. If Adobe goes back to 700 or 800 or higher, then cool. I mean, this call contract's going to be worth a lot of money. But I don't think Adobe is going to do that. I think Adobe is going to start trading in a range, probably between 550 and 650. I think Adobe is going to stay within this range probably for the next 6 months to a year potentially. So I don't want to pay for unlimited upside. I only want to pay for a specific price range. And you can do whatever range you want, but I'm going to do an even number for you guys and just do $10. So what we're doing here is we're buying the call at 560. You then click on the sell button, and then we're going to sell a call against it at 1725. So the reason why it's a debit spread is because you're paying money today for this trade. and I would be paying $458. And how much can I potentially make on this trade? How you calculate that is the width of the strikes, 570 minus 560, this is $10. Subtract the debit amount you're paying, so $458. So potentially on this trade, I can make $542 if Adobe just gets above 570 by expiration. Now I'm not going to hold it until expiration. I usually wait for it basically just to get above 570, and then I take whatever profit I've gotten from the trade. And this is why the returns you can get from debit spreads are so dramatic. Now, I don't want to make it all sound rosy. Debit spreads can lose you your entire premium that you're paying for the net debit. But, Adobe is eventually going to stop falling, and it's going to snap back just a little bit as it starts trading in this range. When I trade in my Robinhood account going forward in 2022, I'm going to be doing a lot of debit spreads for you guys. And I'm going to be looking for stocks like Adobe that are large caps that are kind of predictable. And I want them to trade within a range. For you long-term investors, I'm sorry if it doesn't get above 700 by the end of the year. But I think this is just going to, orderly bounce around between 550 and 650. And if you start putting out debit spreads as it goes up and then put debit spreads as it goes down, you can make money pretty reliably on these channeling stocks. Once again, it's the weekend right now. I can't execute this, but basically if you like this trade, if you went through the trouble of setting it up and you're saying, well, $502 isn't that much of a return, you can go ahead and increase this. You can do it for 10. You can now pay $4,500 to try and make, $5,000 buying 10 debit spreads on Adobe. Okay guys, if you're one of my regular viewers, I greatly appreciate you. Going forward in 2022, we're going to be making more videos like this one where I show you how I set up my options trades. Hopefully you get value from these kinds of videos. If you enjoy these kinds of videos, give me a thumbs up so the algorithm knows it's good. Any comments or questions, let me know down below. I love hearing from you guys. Till the next video, take care.